Hey guys, what's going on? Welcome to the video. So on Friday, we got the first dip in the stock market that we've had in months. And in this video, we're going over what played out for that dip and the key levels to watch for that dip to get bought up at and what levels need to reclaim in order to trigger upside once again for the market. We're also going to be going over the main stocks of interest that I am watching for dip buys with potential for large upside reversals to follow. As always, there are timestamps in the description, and let's go ahead and get into it. Alright, so starting out by taking a look at the S&P 500 chart with SPY. So in last week's video, we went over the major pivot levels to watch, which were at 636, 631.54, and 626.28 to 626.87. We went over how 631.54 triggered the start of the breakout move on Wednesday the 23rd, and that was the key support to hold in order to keep the breakout intact. If there was a fail below 631.54, that would be the trigger to start the pullback and likely target the 626.28 to 626.87 zone next, which also acted as a major pivot and the bottom of the previous range, and this zone was a must hold in order to avoid larger downside. And now taking a look at what played out last week, Monday and Tuesday continued very similar price action, though volatility picked up during the FOMC meeting on Wednesday as it saw a sell lower to backtest the key 631.54 level. Buyers reacted strong off of it, which was initially a successful backtest off that previous breakout level. It then saw a large gap up after strong earnings from Meta and Microsoft, though that got faded lower and resulted in another test of 631.54 in the afternoon. And then the large sell lower happened on Friday with a large gap down that obviously triggered the breakdown below 631.54, and it also opened right at the 626.28 to 626.87 key zone, which rejected as resistance and triggered that next sell lower. It ultimately found support off the 618.85 to 619.23 zone, which is slightly above the bottom of the range of all of July at 617.5 to 618. So into next week, the 626.28 to 626.87 zone and 631.54 now become key resistances, and SPY would need to successfully reclaim above in order to open upside once again. Above 626.28 to 626.87 can target 631.54, which above there the market can reattempt that breakout move from 2 weeks ago and open up larger upside once again. Failing to reclaim those levels would now put sellers in control of the short-term trend, and the key supports to watch below would be at 618.85 to 619.23, where it found support on Friday, and then 617.5 to 618, which has been key support in bottom of the broader July range. Overall, the market had gotten pretty extended to the upside, and this is the first real pullback that we've seen in months. It wouldn't be surprising to see a deeper pullback to backtest the prior all-time high range at 610 to 613.23, which also aligned with the 50-day moving average before potentially attempting that upside reversal, though it also would not be surprising to see Friday's dip get bought early next week either. If we zoom out, the market is still overall well in an uptrend, and there's not much to be worried about on a technical basis, so this should provide some nice trading opportunities with the volatility and once the dip gets bought. Alright, so now getting some trade ideas for the week ahead, starting out with Amazon, ticker symbol AMZN. So Amazon stock was a big loser after reporting earnings and was down about 8% in result on Friday. On the surface, their earnings look solid, but with Amazon stock, it will usually trade based on the results of the cloud business, which is AWS. And the growth rate and margin for cloud came in lower than expected, hence the hit to the stock price. So while earnings were not ideal, it is far from any type of thesis changer, and dips like this tend to get bought up on Amazon stock. So taking a look at the chart, on Friday, it broke and closed below the key 218 level, along with the 50-day moving average, which is currently at 217.61. Those levels must reclaim in order to open upside back up, as 218 was the previous range breakout trigger from June 27th, and the 50-day moving average has always acted as a key pivot for this stock. So watch for a reclaim above those to trigger upside. And on the downside, it could see a deeper pullback before reversing, and the next key supports below include 214, 212.75, which is where it found support at on Friday, and then the next below there is 209.55, which also lines up with the 200-day moving average, which is currently at 209.57. So the two main entry points and trade ideas to watch from here are either reclaim and hold above 218 to enter for that potential upside move, and it could be playable with a tight stop loss back below it at 217 or so. And if it does head lower first, in my opinion, 209.55 and the 200-day moving average would be the big spot of interest for a blind dip buy. Usually you want to avoid buying a falling knife, but it's worth to attempt doing so if it's testing a major level where you can keep risk very low. So for example, if it sells down to 209.55, it could be an entry point with a stop loss slightly below 209 or so to keep risk very small, with a chance for you to catch the very bottom. If it was to fail below there as well though, the only other spot that I would try a blind dip buy would be at the 195.85 to 200 zone, or wait for a reclaim back above the 200-day moving average. Mega cap stocks such as Amazon should always be at the top of your watch list when there are big dips like this, as you can always have confidence that they will make new highs over the long run because they're just cash flow machines. And big dips on these never last long unless we're in a bear market or crash. And one last bullish point for Amazon is it's currently trading at about the cheapest forward price to earnings ratio in history at 31.3 if we ignore the tariff scare, which of course we know that those never came to fruition, so it is pricing in things that never happened. And Bitcoin is also getting its first dip in a while after rejecting off $120,000 resistance and now nearing $112,000, which was the previous high and breakout trigger. $112,000 will be a major decision point if tested, and is currently at about $113,000 while I'm filming this. So some main scenarios to watch for include just a simple backtest and hold off $112,000 as new support, and if this is the case, you'd want to see a very strong reaction from buyers on the test of it. Or if it breaks below $112,000, it can see a larger pullback, but it should continue to be on close watch. As for an upside trade, we'd want to be watching for a successful reclaim and hold back above $112,000, which could trigger a strong short squeeze type move. And the reclaim above $112,000 would be the entry point to watch for Bitcoin and other crypto related names. And re-entering back above $112,000 can also be played with very tight risk, using a tight stop loss just slightly back below that level. As always, the goal with trading is to capture as much upside as possible with the lowest risk possible. And one main stock that should be on close watch along with Bitcoin is Coinbase, ticker symbol COIN. So this was another stock that also got hit hard on Friday. After reporting earnings, it is now testing some key supports. So it's currently testing the 310.5 key level, and if that was to break, it can see further downside to 300, and then the 272.5 to 282 key zone next below, all of which would be valid spots for a dip buy if there's a strong reaction from buyers. And Coinbase also moves very similarly to the crypto market as a whole, so successful support hold coinciding with either a successful backtest off 112,000 for Bitcoin or a reclaim above that level as we went over would be a great entry point for this stock to set up that potential reversal. And the target levels above would be the 50-day moving average, which is currently at 325.25, then 334.6, and 345 to 350 as those next resistances and target levels above. So that's everything that I'm watching for in the week ahead. With volatility comes opportunity, so we will see if some of those dip buy setups potentially play out and give us some great trading opportunities in the week and weeks ahead. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. Good luck trading in the week ahead, and I will catch you all next time, and peace out.